Hi, today is Sunday, January 13th, and taking a look at the S&P 500, looking at the 5-minute chart to get us started off with some initial trading levels out of the gate for tomorrow, January 14th, as we start S&P. I'm sorry, as we start week 3 monthly OPEX. Remember that S&P 500 options expire in a different way for the monthly expiration than any of the other options on the market do. If you're not familiar with that, if you're new to trading S&P 500 options, you really need to read that blog article that I wrote that explains about the quote-unquote special expiration on week 3 each month. Then you'll totally understand what I'm talking about. Okay, so here's our 5-minute chart with a 20 EMA line, a 200 SMA line, and the 50 RSI. I like to use these to help me with confirmation of entries and exits and a feeling in general of whether we are about to lose a rally or gain a rally. When I see these things be gained or lost, and where the RSI is when the line moves below neutral on the RSI. It's usually a great indicator that you should have been out of your calls by now, and as well as when we've been rallying and all of a sudden come down and start to lose contact with a 20 EMA line on a 5-minute time frame. That's usually like a great indicator as well that you should be flipping sides there. Okay, so when we come out of the gate tomorrow, we can draw a little downtrend just to sort of gauge where we're at. We can draw it off of the high for January so far, which was the high set on Thursday. And we can draw an uptrend off of the gap up that we made 2 Fridays ago on the non-farm payrolls number as the first Friday of the year. I have moved this uptrend several times, and right now I've moved it most recently to this last dip that we took during the day on Friday, right at the end of the day at 3:30. So what I would be looking for as we come, what I will be looking for as we come out of the gate on Monday is, do we gap down open below this little uptrend? Do we gap down open below the 20 EMA line? And if we do gap down open, do we hold support at 25.85? 25.85 is really my line in the sand right now because I have January 25.50 puts. I've hedged half of them, but I have half of them unhedged. And if we're not going to even break 25.85, I don't want to mess around with those puts anymore. I want to just either swallow my pride and close them, or I want to fully hedge them by selling short against them and just collecting credit on them. And if we do break 25.85, what I'm going to be looking for is obviously a back test of Friday's low. I believe Friday's low was in general a back test of the December halfway back at 25.73. And if we break that, I'm looking for us to back test Thursday's low at 25.62. This also, kind of works as well with the 80 handle rule. If we're going to break 25.85, we're probably going to test 25.60 to 65. And if we break 25.60 to 65, we're going to roll all the way back and test 25.50. Okay, now if we were to break this low we set on Thursday, we have our 10-day simple moving average coming up quickly on us. I'm just guesstimating that it's at 25.42. It might be even higher on Monday's open. It might be all the way up here, like at 25.50, 25.48 to 25.50. So what I always do is I check what that reading is and I move my price level to it on my 5-minute chart because it's only a daily SMA if you read it off of a daily chart. There's actually a blog article all about the SMAs as well if you want to read that if you're new to trading and monitoring simple moving average lines. Okay, so wherever this moves up to, that will be our line of support if we are to break Thursday's low at 25.62. So those would be my, the things I would be looking for immediately on the downside. First level of support, 25.85. Last line in the sand of support is the 10-day simple moving average. If we come out of the gate and gap up and start moving up, we're looking for a takeout of what our high is so far for the year at 25.9782, and we want to make that move against 26.0354. This was the original swing low of the whole sell-off. It was the October low, It held through the entire month of October from when it was set, held all the way through November, and it held into the very first part of December until it was broken and we flushed down to a new swing low of 25.83. And then after that swing low of 25.83, that's when this scene of the crime edge level started coming into play on the day of the Fed meeting. That was the high of the day that day, and that's why we keep watching 25.85. So when we are above 25.85, we keep our eyes on this 26.03 level. If we can trade through that 26.03 level, we're obviously targeting the 50-day simple moving average up above, but things that might stop us and burn some premium for a while are the 26.14 to 15 level. This was the halfway back on December 14th. That was a big market day. And then above that is 26.21.30. This translates to the area of the low on both the 11th and the 7th of December. So this was previously was also the December low until it broke, and we flushed on down to that 25.83 level in December. So these would be a couple of points that might stop us in our tracks on the way up. When we look at the bigger view here, this is the roadmap made even more simple by dropping out all the notes. By dropping out all the notes, you miss all the nuances and things that could hold support or give us resistance. But sometimes a cleaner view is just a cleaner view, a clearer mind at this point in time. Right now, we really do have some clear things that we can trade around, like that 25.85 level and this 26.03. And once we get above there, ultimately we're looking at our 50-day simple moving average. We have a little gap to fill from back here on December 13th close, and then ultimately the measured move level that I gave to you guys on last weekend's video. That is a doubling up of this move made from the low to where we close out the year for 2018. If we simply were to take that range and double it up, it would take us to 26.67. And as I explained in last week's video, it's kind of scary how perfect this 26.67 or this area right around here rhymes with making a 20% move back down and finally resolving all of the gaps that we left in our wake back to the election in 2016, 21.25 to 20.85. Okay, one thing I just want to finish off the video and talk about is this death cross coming our way up here with the 100-day and the 200-day simple moving averages. When I roll the chart sideways and we look at what happened back here at the start of the sell-off back in late September and early October, you can see price kept holding well above the 10 and the 20-day simple moving average, but then when it started breaking the 10-day and the 20-day, things started getting real. You know, we really started having some bigger ranges. You can see like how small the candles were, and then all of a sudden, boom, they became very big and scary. And then when we had our first bearish cross of the 10-day down through the 20-day, that pushed us down to testing the 50-day. And then in order to break the 50-day, we had to have a gap down move. And we gapped down and we just flushed out, and that got us our first big low at 27.10. So anyway, what I'm trying to talk about here, though, is the 100-day simple moving average, and I'm trying to talk about how these bearish crosses affect us. You can see how this bearish cross of the 10-day down through the 100-day coincides with this huge next move down. This was a bounce up right to the 100-day that failed, and then our 10-day simple moving average crossed down through that 100-day, and boom, we sold off right down through it. And then our second bounce attempt in November around the midterm elections failed as well at the 100-day simple moving average, and a couple days later we had our 50-day cross down through our 100-day, and that was happening in the midst of what was already a sell-off, and we just pushed even lower once again. And then finally our December high, as we came out of the G20 meeting, with that meeting between the U.S. and the China delegation at that dinner, we traded up in ES to an unrealized level of 28.14, and then here we came into at the S&P 500 on Monday morning, and we couldn't even trade beyond 2,800. We couldn't even print a 28.01, and we just rolled over from there. But once again, what that was the market looking down the barrel of the 100-day simple moving average and failing. And now look at what we have. We have our 100-day simple moving average where we've sold every single rally coming coming, every single rally that we've come off of a major low has sold at the 100-day. And now our 100-day is about to cross down through the 200-day. Nobody's talking about this. Nobody's pointing at this. I can't believe that this wouldn't be treated as a huge time sell. But maybe in some sick and twisted, perverse way, this ends up getting treated as a buy signal instead, because it marks that maybe there are value funds, long-term money sitting on the sideline that is waiting for this indicator of this 100-day price coming down to meet that of the 200-day price. 6 months worth of prices coming down to be as cheap as prices were a year ago. Maybe this is in some sick way is treated as a buy signal. How would that be treated as a buy signal? If bank earnings are good, if we make it up to the 50-day and close above it and move above this 2667 level and keep moving higher as this bearish cross takes place. But keep in mind that this bearish cross is going to happen, and as we trade up to it, every single rally that we've ever had so far since the sell-off began after making the all-time high has failed within within either right below the 100-day or within about 10 points or so of the 100-day simple moving average. So just keep that all in mind as we move forward. If we get a continuation on this rally, if the government reopens and we rally on up, great. But just be mindful of these simple moving averages and don't let anybody anywhere tell you that these don't matter, because I can show you proof right here that they do. Okay, these are not mumbo jumbo. I don't even call them technicals. I call them receipts of what the average closing prices are on various time frames. And you can see very clearly that when these things cross, like this 50 and 200-day death cross here, you can see that this preceded this whole leg down in the S&P 500 here. Okay, just as an example. And here you can see that when the 20-day crossed back down through the 10-day, that also just sort of instigated things. What we cannot have is this death cross and pretend it's not happening up here, because it just sort of seems to me like we're ripe for the picking for another rollover and sell-off again. If there's continuation of the government shutdown, we've got the G20 meeting reconvening once again this week. Is the U.S. not involved with that or something? I'm surprised that it's not being reported more. I didn't even think about it. I just happened to see it on the Forex data calendar that I referred to, and lo and behold, that's where our December high was coming out of the G20 meeting. So we've got a lot of things coming to fruition now, and of course bank earnings starting in earnest tomorrow with Citibank, and then the big koala on Tuesday or Wednesday with JP Morgan. Anyway, that's all in the notes there. I don't want to drag this video out any longer than it already is. I just wanted to get you a good start, and I just want you to understand, the bearish indicators as well as the bullish indicators. This is a very bullish thing that we had this 1020 SMA cross and did not sell into it, because we sold into every single other one that we've traded so far since the beginning of the sell-off back when we printed the all-time high. So if we can continue through bullish and ignore this sell signal here, then maybe there really is some demand in this market that wants to see us push higher. And you know what? That's fine. We'll trade shorter term calls for the rallies, and we will look to buy big, juicy, longer term puts out a month in expiration for the big downside move that we know eventually will come. Okay, that's it. Have a great rest of your Sunday. See you on futures tonight. If anything good is going on, I'll post about it. If not, then you just see me in the morning. And as always, I'll be posting in pre-market. Have a great rest of your Sunday again. Good luck and good trading.